This is where we kick off with the financial planning topic with our CFP, Harrison Johnson. And Harrison, today you're talking about trust and retirement accounts do not mix. Well, we have these all the time. What do you mean they don't mix? They go together, don't they know?
They're both financial things, I guess. Tools. Yeah, there you go. But, a lot of people have retirement accounts, IRAs, Roth IRAs, 401ks, whatever. All of those accounts have beneficiary designations, and you typically do not want to have your living trust be listed as a beneficiary of that retirement account. So people get trusts, and they think, well, I need to put everything in the trust. Your house, yes. Bank accounts, yes. Non-retirement accounts, yes. Retirement accounts, though, generally you do not want to have those listed as beneficiaries.
And this is one thing I'm sure you check for people. And every once in a while, I've been doing this for 40 years. Once in a while, I would see that. Like, why? I mean, are you still seeing this? I mean, do people not get the message?
It happens sometimes, or the times where I see it where someone will go get a trust and then they'll say, okay, I'm ready to update my retirement beneficiaries. And it's like, no, we don't want to do that. And I mean, there are cases where if you're working with an attorney to put a trust together where you can list a trust as a beneficiary, but it has to be for a specific reason. But in most cases, if you get a living trust, you want to keep that separate from your retirement account. It adds complexity, and the main thing is it typically causes your heirs to pay more taxes because it reduces their options as far as taking distributions from that account when they ultimately inherit it.
And I know Chase had a question, but I know we've seen this with big companies. Yeah.
That's what you were thinking.
Oh, okay. I'm sorry.
So
took it away.
So I mean, we had a case relatively recently, and this is why we're talking about it. Not a client of ours, but there was somebody, they had an account at Fidelity and passed away, and we found, because we were talking with the heirs, that the living trust was listed as a beneficiary, and it causes a whole problem. In this specific case, it worked out because the living trust was deemed as what's called a see-through trust. It met some requirements where ultimately that money was able to be pushed into inherited IRAs for the heirs, and they were able to distribute over their 10-year period. But if that's not the case, in many what happens is the money has to be distributed over a shorter 5-year period. So same account, same balance, same income, but now since it's over a shorter period, that just results in extra taxes. So we do see it, and ultimately, if you can list whatever beneficiary you want. Some companies might not bring it up; they might just allow you to do it, and your heirs are the ones that are going to have to deal with it.
I was going to say, it's interesting on that case is, Fidelity does some great things. I don't want to sit here and bag on Fidelity, but in this situation, the executor didn't really have a relationship with Fidelity. It was, again, the person that had passed away. They had that relationship. Well, they were kind of doing a lot at Fidelity on their own, and this person that didn't have a relationship with Fidelity is like, what do I do? And I'm like, oh, we can't talk to Fidelity. We're not on the account. I'm sorry. And I was like, if you can get me the beneficiary, we can kind of maybe help provide some guidance. And that's when we found out it was the trust. And I was like, well, normally you just split it to the different people. But in this case, I'm like, you're going to have to talk to them about the trust. And they're like, what does that mean? I'm like, oh, you're going to have to work with the estate planning attorney. You're going to have to work with Fidelity. It created so many complexities, as you said.
And that ended up to be okay because ultimately the beneficiaries were still able to, roll the money into their own inherited IRAs and be subject to the 10-year rule. And part of that is because the attorney that put the trust together kind of had a backup plan in case that happened. Yep. After talking to the attorney, they're like, oh, it shouldn't have been that way, but they're not the ones that actually list the beneficiary. So it turned out to be okay, but in many cases it doesn't. So again, if you have a retirement account, which a lot of people do, make sure that you're not putting that living trust as the beneficiary of it. It just adds complexities, and it's not something you would have to deal with. Right. It'll be your family members usually.
And I don't want to knock, Fidelity and Vanguard and principal of these big companies, but the problem is that there's no one really watching over it. If you don't know what you're doing and try to do it on your own, and maybe what if people say, well, I don't need a trust because I've got a beneficiary and I'm okay. What if you don't have all these things? No one is going to call you up from Vanguard or Fidelity saying, oh, you need to take care of this. Mm-hmm. That's why they need to have a good financial planner. And I'm a big advocate. We're not a small firm. We're not a large firm. We know our clients. They can call us up anytime. And the thing I'm always big about is getting the same person. They're not going to say, oh, I saw in Barron's this thing like, oh, the big teams now. Oh, well, if I'm not here, somebody else can answer it. I like to deal with one person. If somebody calls you up and say, I want to talk to Harrison, there he is. I want to talk to Chase, there he is. It's not like, well, you can't talk to me, you got to talk to Joe Smith because that's not my area. I mean, it's just, I'm not a big advocate of big companies. That's why we run our company very personally.
Yeah, and I mean, we have a lot of clients, but we know them all really well. And I mean, we're very accessible. So even if we're out of the office for whatever reason, you usually can get a hold of us if you need something. So
yeah. So I do have to admit, sometimes I can't remember the names. I recognize the faces, but not the names. Alrighty, well,
showing your age there.
Note,
yeah, I know. Yeah, it is my age. Okay, I'll say it's my age. But no, that is good information. Again, look at this stuff, and this is why you need a good financial planner to look over things for you, find out things you don't know. What you don't know is a big problem. If you want to contact Harrison, give him a call at the office, 858-224-0004. Again, that's 858-224-0004. Or go to the website, smartinvesting2000.com. Again, that's smartinvesting2000.com. Send them an email, say, gee, I'd like to take advantage of that free consultation. And again, you'll talk directly to Harrison.